Okay, I just spent 36 minutes talking and I wasn't recording. So, why does this keep happening to me? Because I'm not damn good at this at all. Anyway, welcome to the weekend video, everybody. I could say everything that I just said in the previous one, but I'm not going to be able to now. Okay, I'm going to get into this and we're going to absolutely plow through it. So, this is, I'm going to start in the dollar crosses and then work from there. This is the Euro Dollar Daily, and I've been working with this triangle, as you know, for a long time. And I think we're so close to a turn, but obviously it got ruled out. The previous decline turned out to be a correction, and now we've got a spike higher again. And this time it seems to be, I think it's the ultimate move. This was the penultimate move. This is the ultimate move. Still able to read this as a three-wave move higher, and I'm going to explain that again because some people may not understand why I'm still calling this a C wave. But anyway, we've got an A, B, and an extended C wave. It's a super extended C wave, I know that much, but a C wave nonetheless, because this pattern here in this B wave is so nicely defined as a triangle. It's overlapping. It's got three waves in each move, and then we completed with a spike out of the triangle. So if that's a triangle, it's not a second wave. If it's a B wave, then this is still a three-wave move, and then the overall move is still classified as a triangle again. So we're topping out in a C wave, and we should move lower into a D wave, and I think this should just culminate in a series of lower highs, complete or to end this rally in euro for once and for all. I've still got that alternate account there, but I'm not confident in it at all. Okay, let's get into the 4-hour chart. We seem to be tracing out a 5-wave move higher. So here's that B wave triangle. And here we've got a wave 1, 2, 3, 4, and 5. Now, what's happened to this 5th wave here is up for debate. But I only have myself to debate with, so I always win. Forgive me, it's a terrible way to be. That's just the way it is. Okay, so we're going to the hourly chart here. I think we could be moving higher in a series of 3 waves, so you can parse that out as a 3-wave move. If you push yourself, we've got 3 waves down. We could have 3 waves up in wave 3, 3 waves down in wave 4, and then maybe some sort of a 3 waves up in wave 5. We'll just have to wait and see on that one. We seem to have another significant high here developing. It marked the high of wave 1 and the low of wave 4, so we've got a 1922. I just want that impulsive move lower in wave to begin wave 1 down. So that's what I'm working with. Now, okay, so here we go. Sorry, I've got stuff happening outside the door as usual. Now, I think if you look at the, I've been showing COT charts throughout the week, and if you just look at the incredible, deluge of horrible sentiment against the dollar, you just have to look at that and say, this can't last much longer. I mean, people hate the dollar. I don't know why they like the euro. It doesn't even look nice. But there's no reason to like the euro over the dollar. If anything, you should hate the euro over the dollar. Especially seeing as most people in Europe hate the euro. And they're all going to cast it off eventually anyway. So, don't be fooled. Anyway, I think we're coming to the end of this, whether it's a C wave in a triangle or a C wave in a flat, we'll see. Okay, let's go on to cable. I think we've got a triangle here also, and we're topping in a C wave. We've got, I didn't see a new high coming out here, but that's what we've got right now. So we've still got an A, B, C pattern. So we'll just have to see how this comes out in the wash. I think. Well, let's see. Hold on. The triangle is still in play, so let's leave that there. I think the move higher here recently has been possibly an ending diagonal. So we've got this C wave top here. So it's still got C, D, and E. We just kept out above the previous recent high. And we're going to move lower into. Now, I'll get back to this. Does anybody ever see those videos of those guys that go on TV and their kids break into the room? It seems to happen to me every week. So, except my videos don't go viral. Okay, so the triangle fourth wave still in play, possibility. Let's get into the hourly chart here. So we've got an ending diagonal. I think we've got a more clear ending diagonal here in cable than we do in euro dollar. But we've got a wave 1, 2, 3 waves up in wave 3, 3 waves down in wave 4, and then this complete mash for wave 5. But you can still call it a 3-wave move if you call this an internal B wave. It's really chugging to a high. If you can see here, the momentum has been just declining in 4-hour chart. This is like just really telling, especially given the internal pattern here recently as so overlapping, and just it's that kind of the last push of energy that you have in you to trade higher or to push higher. Let's say if you're climbing a mountain, it's the last final hike to the peak, and then you just give up. So I think cable is going to give up pretty soon, and we'll see that over the next few weeks. This kind of dollar yen has been a bit of a disappointment this week. I think we've still got a reasonable chance that a B wave low is in place, triangle B wave low, the opposite triangle we call it. And the reason I'm mainly thinking about that is because of this spike, this nice impulsive spike that we've had. Okay, the 4-hour chart here. You can see that nice impulsive spike higher. I'm labeling that wave 1. Wave 2 has been a real head scratcher. So that's what I want to see. I want to see a second wave complete and then a move higher into a third wave. Obviously, we won't get confirmation of that until we break out above 105.60, so call it 106. And let's get into the hourly chart here. I'll show you what I'm thinking about. That's that B wave low, that long-term B wave low. So you can count here 1, 2, 3, 4, 5, 6 degrees of trend, at least. And a nice, real whipsaw move higher in wave 1. A real kind of, almost out of the blue. That one, someone maybe inadvertently they bought and didn't realize they did it. They've completely sold out again anyway. So we could have a truncated C wave to complete wave 2 with that final spike this week. Still, the jury is out on that. We haven't had 5 waves up to complete, we haven't had 5 waves up at a lower degree to kind of confirm this initial spike higher, even though I thought we may have had. This move here has turned out to be an ABC move, and still awaiting the turn towards the dollar. Here's the daily chart in US. This is the Dow. So looking for that, if you know me, I've been looking for a top for a long time. Thought I had it. It wasn't. Turned out not to be. We've had the greatest rally in history, to the greatest overvalued high in history, to the greatest overextended market in history, to the greatest, let's say, mirage of a functioning market, the mirage of a market, at this mirage of a top. I always thought that if this was a B wave top, but obviously that got wiped out over the last month with that kind of real spike higher off a 3-wave decline. So that ended up being a 3-wave decline, ended up being a 4th wave, and here we are again talking about a 5th wave. So here's the 4-hour chart. You can see that this 5th wave is breaking out kind of pretty nicely as an extended 5-wave pattern. And here's the hourly chart here. This is the final 5th of the 5th of 5. We've got wave 1, 2, an extension in wave 3, either a triangle or a simple 3-wave decline in wave 4. And then what I'm working with right now is that we've got this, an ongoing developing 5-wave pattern in wave 5. Maybe not. We'll have to see how that pans out. I still think we'll probably see higher highs over the next week or so as we push higher into wave 5. And then off that, 29,400 again will be the level that we'll be looking at to turn this around. Okay, let's get on. Let's move on to gold. A lot of people want to see the gold anyway, so me too. So I'm going to move to the daily chart in gold. Here's the this is the daily chart. Oh dear God. Anyway, this is the daily chart, daily count in gold. We've got, I think, a 3-wave move down, a potential low in place for wave 4, and a potential low for wave 4. This could be a combination move. Like this could be a series of 3s forming that recent low, but a nice spike higher this week. I can't stop laughing because my 4-year-old is outside the door crying. So what am I supposed to do? I'll keep going. I'm sticking with you guys. If you stick with me, I'll stick with you. Okay, so this is still a series. This is a 3-4, which should lead way in a 5th wave. Should lead, sorry, the way to a 5th wave rally. So I think we're approaching a pretty significant low right now, and that should at least push out above the recent all-time high. So that's what, 2077 or so. But I would expect probably a significant bit more. Let's say I'm losing my train of thought here. A little bit more significant of a rally in wave 5. Maybe, we might push 2,500 towards 3,000. Maybe, who knows? At this point in time, so let's go. First of all, I want to clear the way out of this 4th wave decline. So we've got 3 waves down in A, 3 waves up in B, and then 3 waves down, which could be wave C. I'm still leaving the door open for a possible new lower low to complete 5 waves down in wave C. But, the jury's out on that one, as is everything in the future. It was a nice rally this week, and that's kind of where you'll see the alternate count come in right now. So let's get into the hourly chart. At least I'm not mincing my words as I was in the first video. It's good practice for video dictation. Okay, so here's the alternate count. Alternate low for wave 4 after a 3-wave decline. So that'll be the combination wave scenario. We didn't push above wave 1 just yet, so this is the wave 1 low here. So I was citing that throughout the week of 1849. There are 2 scenarios now where wave 4 can complete, quite legitimately. So it could be what I've shown here is a triangle. So it could be a triangle where the price just continues to contract over the next few weeks, and then we get a new low in wave 5. Or it could be a running flat. So we've got an A wave up, B wave down to new low, and then a lower high in wave C. And that would still fit the scenario or fit the rule where wave 4 does not complete or completes below wave 1. Anyway, you can see right now that I'm still leaving the door open for one new low in wave 5 of C. But I think we're very close to a significant low. And you guys that are subscribed to the website will find out which way this breaks pretty quickly next week. So I'll be watching this one. This is going to be a very interesting market next week. Okay, so let's get on to crude oil. I'm still, hedging my bets towards a fourth wave top here. It would be an ending diagonal fourth wave, but that's a fourth wave nonetheless. We've got a three-wave move after a very long extended wave A, three waves down on wave B, and then a five-wave pattern wave C. If you come into the hourly chart here, you can see though that's the fourth wave low down here off the chart. We've got wave 1 and 2, nice acceleration in wave 3, and that's where we reach the high in momentum also. Ever since that wave 3 high back in early November, we have been declining momentum. So we've got that divergence again in place. So wave 3 high, then either a triangle fourth wave or a simple three-wave decline in wave 4. It's hard to call now. There's part of me that quite likes that triangle scenario, wave 4. But we'll have to see how wave 5 pans out in that case. For the moment, we've got a wave 3, 4, and a nice 5-wave pattern in wave 5 here. So I'll stick with that for the moment. So that could be wave 1, 2, 3, 4, and 5 of 5 now, coming towards the close. I don't like this pattern that we've seen here over the last couple of days. It seems, maybe it's just a function of my derivative chart, but it seems a little bit unconventional, let's say. So we've got a three-wave move down in wave 4, and then a possible rally in wave 5 of 5. Okay. This will probably go hand in hand with the stock market. Okay, so the S&P, here's the daily count. The S&P is one and the same with the Dow right now. I thought a couple of months ago that the two markets were kind of diverging a little bit, but right now it doesn't seem that way. But all the same, we are still, we've still got that trumpet pattern in play. We're still skirting along the upper trend channel line of that pattern, and I still think this is the fifth wave. Let's get into the 4-hour chart. You can see here we've got the wave 1, 2, extended wave 3. Slightly, let's call it, if not problematic, a little bit center off center or off left field, let's say, fourth wave. So because wave C of 4 didn't break to a new low, so depending on how we read that, this could be a triangle also. It could be an A, B, C, and then a very sharp D and E here, and then we moved higher off that. You can see here that the 4-hour momentum is showing something pretty telling, and that is again a significant divergence between a rising price and declining momentum. All we've done this week is just grind higher in a series of very, very small new highs. And you can see almost every low was every high was retraced, every low was kind of overlapped, and the best fit I think at the moment is either either we get a pretty serious acceleration early next week to call this a third wave up, or we are tracing out another ending diagonal, maybe after a triangle. So a triangle and then an ending diagonal. That'd be an interesting pattern, wouldn't it? Anyway, the initial target was where wave 1 and wave 5 would reach equality. That's 37.22, and we're kind of grinding towards that. So we'll hit that, won't it? Doesn't it? So next week I'm still kind of looking up, but up towards the top. Here is silver. This is a daily count in silver. It's a bit messy. Let's actually get rid of that grid. So I still think we're talking about wave 1 and wave 2, but there are some interesting, let's say, alternate patterns for this second wave to follow. So it could break a few different ways. So I'm not totally convinced I'm allowing for this rally to turn into something bigger, but I'm not totally convinced about it yet. It was a nice rally this week, I'll give you that. But there are a few different ways that we can slice this onion to give us a lower low in wave 2. So watch for that. So we could be talking about wave A down into the initial low, and then an A, B, C, D, and E triangle. So that could be wave B, and then 5 waves move lower in wave C to a new low, and that's satisfactory. I mean, current count is satisfactory. Sorry, let me swallow my words there. It's to a degree, it's satisfactory. The best thing that it's got going for it right now is the fact that it was a very impulsive rally. So it's 5 waves up. If we get a 3-wave decline, then we'll be on for something a bit bigger, I think. Okay, so let's get into, well, there's one more alternate here that I would like to go through. The idea that we have an ongoing B wave triangle. So we could have 3 waves down in A, then we could have an A, B, C, D, and E. So if we get this kind of continued oscillation around $23 over the next few weeks, this kind of consolidation and another lower high, well then that would be that'll be a B wave triangle, and then we would expect one more dip into wave C, and that would probably bring us down towards that $18 level in that scenario. Okay, so let's get into the hourly chart. For the moment, we're looking at 5 waves up off a possible C wave low. I know that it's a little bit messy, the pattern, but I think we should allow it to play out. If it's 5 waves up and 3 waves down, then we would expect to rally again anyway. So I would like to see a decline into about 23 in this second wave to complete it. But it seems like we've got a slight new high today, but it just has come as a 3-wave pattern. So we've got wave A down, wave B up, and then we should break to a new low in wave C with a minimum target, let's say below 2360, but a preferred target down at around 23 or 2310 to complete a second wave. Okay, I think I did the right thing this time. Let me just check. Oh, yes, I did. Okay, so thank you all for hanging around the website. Thanks for all you guys who watch the videos and comment and like and share and all that stuff. I've never been good at asking for that. I don't want to kowtow to YouTube. But thank you all the same. Thank you for all you guys on the website. You've been a real blessing to me. And thank you again for watching the video. I'm probably going to plow straight into doing tonight's update. Grab a sandwich and then go back to work. So all you guys on the website, I'll see you in a short while, in a few hours. And for everybody out there in internet land, God bless you all. You know, have a great weekend. I hope that God will bring you through it safely, and we'll be back here again next week. But it sure is strange days. I didn't mention it through this video, but boy, we are living in strange times. And anyway, never fear. One of the most repeated sentences that our Lord said, or Jesus said, was, "Do not be afraid." So that wasn't a suggestion; it was a command. So "Do not be afraid" is the command, and we shall go from there. All right. God bless. See you all next week, and have a nice weekend. Bye-bye.